George, hello everyone, welcome to our new intraday video. We have a lot of going on. As you know, finally the US is realizing that coronavirus is also spreading into their country. Flights from Europe are cancelled, a lot of events, NBA games or so on are cancelled, so it looks like that finally they are taking these things seriously. On the other hand, we have also Italy, which is closing down everything, it appears, which can have a very strong negative impact on the whole Europe actually, and because this easily can spread, it's like a domino effect. And also you have the ECB today, which is trying to help the economy, but when you have everything closed down, even if you want to offer cheap money to companies for them to spend, it's not easy to spend these days. So no matter what they do, I think it's a very tough situation. They have not enough options available actually. The only thing of everything what I see to prevent market from falling further is actually if we came out with some new solutions, some positive news like vaccine. Okay, if we get that news, then in these very bad times, I'm sure that investors and companies will grab this and see this as a very positive, because our minds are managed so that in a very bad times we are desperate and we definitely want to hear some positive news, and we will grab it very quickly. So that's actually the only solution to everything what is going on, I think. Stocks are at some key levels. I will show you the charts in the minute. But before we go to stocks, let me look to the euro dollar. Now, euro dollar, as you can see here, it's coming to the downside, but it has a very slow overlapping price action. It looks that this can still be as a wave 4. Okay, so I would not be surprised if we see a bounce. Maybe the ECB will be a trigger for this bounce, especially if they will not cut rates. Then this could definitely send the euro dollar even higher. Ideally, this will be a fifth wave actually of this ongoing 5-wave cycle from February 20th. So technically speaking, or from a trading perspective, this fifth wave rise and then potential, or maybe with a spike higher and then potential turn down, would be for myself very interesting if we see maybe an impulsive decline from a new high, because I still think that this can be a very deep recovery, still seen as a wave B. Okay, we just maybe have to clear some stops here above 1.15 before market really turns lower. If we maybe just see a straight move to the downside and took out this 1.11 level, then definitely I will have to consider that maybe top is already in place. Now looking at cable came to the downside. It looks like this is flat formation, can be finished, so watch out for more downside, especially after short covering rally. You have some nice resistance coming in right around 1.2980 up to 1.3 psychological level at this minor swing high here. Okay, let's take a look on Aussie. Well, as you know, Aussie has already cut the rates at the start of March, so maybe this currency will now stabilize a little bit. And also what is important to know that I see that from media that China is already picking up, is still recovering. Okay, so this may have a very nice and positive impact on Aussie. So maybe it's not everything so bad as it looks like, because if China, where it all started, is already picking up, then we can expect that everything else, everywhere else, will also be the same thing, but obviously with a delay. Okay, so if the China, if it's really in a recovery mode, if the coronavirus will slow down, it stops spreading, we are also headed now per calendar into some very warm days, so definitely it could limit this coronavirus itself, and this will help the Aussie, I think, to lift higher prices. We have seen a very nice ABC move so far into 61.8%, but it's a do-die zone here. Okay, if you want to trade this pair, well, be aware that there can be a weekend gaps again, but technically speaking, if we can rally 100 pips from here and take out this wave B swing high by an impulsive reaction, which is a very sharp move, then I think that Aussie is going to see more upside next week. Okay, New Zealand dollar actually can be in a very similar situation. You see here sharp wave A, and now you have a wave B pullback. There's a much more important support maybe at 6.170 area at the 61.8%, and also there you have wave C equality to wave A. Okay, now let's take a look on dollar CAD. Now dollar CAD is moving to the upside. Obviously it has seen a strong move to the upside because of crude oil prices triggering lower levels. We see crude oil reversing now from a fourth wave into a fifth wave. Now whenever you will have a fifth wave at a new low, that's when dollar CAD maybe will really start to showing us top formation. But for now that's not the case yet. But what is really important is that we can already see slow price action here at the high. So market itself, despite lower crude oil, a few percent in the last 24 hours, we do not see any strong progression to the upside on dollar CAD. Okay, so maybe all of those commodity currencies will really do a nice rally once maybe stocks can find a temporary support down there, because we are at some important technical levels, and also if maybe crude oil will complete that that fifth wave. So if we take a look on crude oil here, we are in this wave C decline that has more to go, but looking at the short-term cycles, I'm expecting a fifth wave of this extended wave 5 here down from February 20. So maybe that's the area around 25, 26 where actually this crude oil could pick up. Now crude oil is very volatile, and always when we reached some extreme levels, it was not hard from crude oil to actually pick up very quickly. So I would not be surprised by a strong rally once we reach this fifth wave down there. Now let's take a look on dollar yen. Now imagine if we see really something positive, and that stocks are really ready to stabilize. Well, that's when actually dollar yen could be interesting to watch. Why? Because you have 5 waves up from the lows, you have this ABC setback to 61.8%. There was also this former wave 4. So I really like the idea that stocks are much lower, okay, but dollar yen is here much higher. So if stocks will rally, I think dollar yen could really be pushed to the upside. However, 104.80 should be really taken out. In that case, we may even go back to this 107.73 level. Now, maybe next week. If for any reason we just move straight to the downside, then obviously I would say that this latest recovery was a wave 4, and I would be waiting on a new bounce from around 100 level, which is psychological level. Okay, now let's take a look also on, as I said, on the S&P 500. Okay, so the S&P 500, as you know, I highlighted this bearish pattern yesterday because of clearly 3 waves up back into this horizontal resistance down here. Okay, so we failed here to push even higher, and it looks like that we are making a new 5-wave fall. You have waves 1, 2, an extended wave 3 maybe now in progress, then you have wave 4 and wave 5. So overall we can be approaching some very interesting potential key support levels. They are do-die levels. I have here also on the 4-hour chart looking for 5 waves down, moving to this Fibonacci projection, which is equality level compared to the first leg. So always when you have 5 waves down moving into equality level like this one, you should really pay attention, okay? Because even if we go much lower after a bounce, you may still expect at least 3-wave bounce. So I would not be surprised by a 3-wave rally in the next few days actually. Okay, now looking at the German DAX, we came much lower here in this one, but again with 5 waves of decline, with the recent break out of this 4th wave triangle. Okay, so maybe there is coming a support. It's not far away. I mean, there you have this intraday chart move out from that triangle. Let me just ABC, you have wave D, and you have a wave E right there. Okay, so looks like that this market is now trying to maybe stabilize down there, watch out maybe for another final spike, and then just be aware of a short covering rally. It could be just a technical reaction on a bounce, but still I think that these are some very key levels that we should pay attention on. Now, to give you a perspective on a daily chart, well, obviously that's not triangle anymore. It's invalidated, obviously, because current drop took us below this 2019 lows. And I know that markets and I mean investors are concerned, and traders, whenever you see such a drop fall, but that's a personality of a stock market. It's falling fast, it's rising slowly. Okay, so always when you have such a price action, you have to remind yourself, where are we on a longer term scale? Okay, it's not easy to say that there's an all-time high and that we are going straight down for 50-60%. Okay, you really should be aware of where the trend is. And now looking at the daily chart here, sorry, that's a monthly, not daily. We are at the 38.2%, right? We are at the former wave 4. Of course, there is room for 50%, and towards this this fourth wave of the previous correction. So maybe that's an interesting zone from where we may stabilize. Okay, and since we have 5 waves down, if something, as I said, if maybe waxing will be a solution to everything, well, then you have probably a nice short covering rally here, and maybe even some nice impulse. Okay, so we are at the do-die zones. Very important, I would say, will be the next week of trading. What will happen, how the market will respond at these levels. Okay, let me check if I have everything covered here. We covered dollar, yen, dollar, CAD, intraday, crude oil, New Zealand dollar, euro, dollar. 10-year US notes. Okay, so the 10-year US notes, as you know, I have been bullish on this one for a while, but I think that now we should take into consideration that markets were overbought extremely here, that we run into fifth wave, and that maybe fifth wave targets or top is not far away. Of course, there is, based on this wave count, there's a chance for another push higher. We are at 38.2%, but maybe that will be a final blow-off move before market reverses lower. So watch out here, and don't be surprised by a reversal lower. If this really would be a reversal down, I think we need some positive news, right? So let's see how the market actually will respond. But technically speaking, we are in a fifth wave, and always when we were, make a nice extended move like that one, you could reasonably expect a free wave retracement, maybe even back to the former wave 4. I know that it's a very tough call in the whole situation that we have right now, but technically speaking, I just have to observe the market activity and respect what the market is doing. I mean, this is definitely a crowded move. I mean, gold was a crowded trade and is coming down sooner or later. Everything is so crowded, so if you can recognize the pattern and be one step ahead of the crowd, then you know what the next cycle will be. And when this next cycle will actually unfold itself, again, a lot of them will be caught on the wrong side. So it's very important for me actually to observe the whole price activity from an Elliott wave perspective, because in these uncertain times there's definitely markets that are clearly driven by fear and sentiment. Okay, so I would not be surprised if again we see some new shift in the upcoming weeks and months. Traders, thank you very much for your attention. Hope that you enjoyed this video. Be very careful with any new trades. Don't leave trades open through the weekend, and definitely trade with stops, trade small. Okay, traders, thank you very much and have a good day. Bye.